Economists agree that the labor component is the most important one to the U.S. economy right now, and the government seems to agree. Beginning next month, the Labor Department will provide more detail on the length of unemployment in the U.S. So the change may affect data on the average duration of unemployment, but it should not influence other figures. With a little bit more about what the change says about the government's view on the labor market, we bring in economist Ray Stone at Stone McCarthy Research. He is a Bloomberg best unemployment. Ray, thanks so much for joining us this morning. So the Bureau of Labor Statistics monthly jobs report is going to show how many Americans have been jobless for periods of up to 5 years, and this compares with the current cap of up to 2 years. So what does this say about the government's view about the data?
Well, I think the government's view on the data hasn't really changed, but there has been a lot of interest in long-term unemployment. And, of course, this is an issue for the Federal Reserve. They're concerned that if long-term unemployment continues, job skills will erode, and people will be less able to re-enter the workforce or less able to take on new jobs. So they're concerned the longer the unemployment, the more difficult it will be to get the unemployment rate down.
So that's why we're seeing this extension, if you like, or this bigger window into people who have been looking for 5 years versus 2 years. Will this data give investors a better idea? Will it give the Fed a better idea of what's going on in the labor market?
Well, it will enrich our understanding of unemployment. And, of course, what we have seen recently is a rise in longer-term unemployment. In fact, the people who have been unemployed for over a year is about 3% of that 9.8% unemployment rate. And this is a historic high. And, of course, if it goes higher still, that would be very bothersome. So it will enrich everyone's understanding of unemployment and perhaps help policymakers. I don't know how much it will help Wall Street, but help policymakers decide what the appropriate course of policy should be.
Ray, is this new framing going to change any of your calculations or any of your models going forward?
Not really. It will enrich my understanding of the data, just like it will for policymakers. And I think, I'll have a better understanding of how entrenched the unemployment situation is. The longer the unemployment, the more difficult it will be to come down.
Yeah, that makes sense. Well, the December employment report, we know, a week from tomorrow. What do you expect from those figures?
Well, I'm guessing it will look a little bit better than the November report. I'm thinking we will probably see maybe 115,000 new jobs in the payroll report, maybe 140,000-ish private sector jobs. And I think the unemployment rate is more likely to go down than up. There was a surprise uptick in November to 9.8. I think it's probably going to be 9.7 or even 9.6.
So, Ray, when can we see a recovery or at least unemployment start to come lower?
Well, I think we're on the cusp of that. Earlier in the show, people were noting the unemployment claims data coming out later this morning. I think that will be about unchanged from the prior week. But the general direction of these claims has been downward. And the general direction of the insured unemployment rate, these are people who are eligible for unemployment insurance, that rate has been coming down nicely. And that typically leads the national unemployment rate. So I think we're on the cusp of better numbers. I think 2011 will be a better year than 2010.
Ray, thank you so much. Bloomberg best Ray Stone joining us there from Stone and McCarthy Research.